Hey guys, this is James from parafix.com. So first of all, let me tell you everyone Happy New Year. As you can see right now, it's a new week of trading, and this is the main reason that the opportunities are already there. But first of all, let me start let's make a sort of a small brief about what happened in 2009. So in 2009, basically we saw a dramatic weak US. Okay, the US basically was very weak. We saw how the interest rate in the US dropped down. It also was an effect, a domino effect, and this is the main reason that we saw how all around the world the central banks that decided to take the interest rate down. Now, in the US, it is important to mention that the main reason that the American Fed decided to do that is just because it was expected that if the interest rate will go down, that way more investors will decide to invest in the US and the economy will rise step by step. Is it what happened actually? We're not sure about it because still the situation is quite bad. America have lots of debts that hopefully as expected and as more analysis are actually expected, they're expecting that the US will get stronger in 2010. I'm not sure about it, no one's sure about it, and this is the main reason that in order to make sure what's going to happen, we should take sort of a short term instead of a long term, because no one expected that 2009 will look like that from economy point of view. Let's move right now and we'll move forward and we'll see also what happened because of that recession. Because of the recession, basically we saw American US weak and the other currencies got stronger, type the Brazilian, type the Australian, type the Canadian, and that happened because they're related to the commodities. And once the commodities are getting stronger, that happened of course of the weak US, so we saw how the Australian enjoying the benefit, the Canadian enjoying the benefit and getting stronger day by day. Right now, let's look what happening in 2010. Right now we're starting by looking on the US against the Japanese yen, and let's see what happened on the previous months in order to understand more clearly how the market looks like. So let's look first of all on a weekly chart, and on a weekly chart you will be able to find how the US got already to the bottom and right now making sort of a correction day by day and starting to go up. Weekly chart showing us actually that each candle is 1 week, and if we're looking on the last few weeks we'll be able to find an uptrend. Now it's touching right now already the 50 point, as you can see right here, and in order to make it more clearly, you have to understand that it touched the 50 and sort of, let me fix it, okay, and as you can see it's sort of making a correction right here. In order to see the correction, I will move to a 30-minute chart that each candle is actually 30 minutes, and as you can see going up, touching already the 50 point, and from that point sort of making a correction. Now that pair probably going to bounce up and down in that range until it's going to break either the resistance, either the support. So as we mentioned, today we started a new week, and the new week showing us that the US is quite weak and the Japanese yen is quite strong for the short term, and we mentioned that it's probably going to touch the 92.71, and it did touch that. So this was our move by selling in the 50. We sold the US, we were waiting that it will touch the 92.71, and right now it claimed back up and started to make sort of trying to go up, didn't do that, and it will try to break the support once again, and if you will not see that he will break it for at least 3 times, that way of course you will know that the direction is still a strong US and a weak Japanese yen. But make sure that you're looking what's happening today, because today the US is quite weak and the Japanese yen is quite strong. That was James from Parafix. Take care, have a nice trading.